Now, the topic which we are going to start, that is IS 10, events after the reporting period. What we will discuss in this session, the objective of this standard, important definitions, adjusting events, non-adjusting events, and going concern assumption and disclosures. So these are the areas which we will cover. First of all, the objective of this standard is to prescribe what when you should adjust your financial statements for the events after reporting period and what you should disclose about these events. So these are the two things which are covered in this standard, that if any event occurring after the reporting period, when you should have to adjust it in your financial statements, or what you should have to disclose about these events. Now, first definition is events after reporting period. An event which could be favorable or unfavorable. Favorable. It could be favorable. It could be unfavorable. Favorable, that occurs between the end of reporting period and the date when financial statements authorized for issue. So these events occurs between these two dates, reporting period end date and the date when financial statements are authorized for issue. If any event occur in between these two dates, that is called event after the reporting period. It's explained through this timeline. Say end of reporting period is 30th June 2019. Closing work finished 30th July 2019. Board of Director authorized for issue 15th August 2019 and shareholders approval comes at 5th of September 2019. Now, when financial statements are authorized for issue 15th August, so your reporting period is and events related to this are from 30th June onward to 15th of August. Okay. Now, adjusting events. An event after the reporting period that provides further evidence of conditions that existed at the end of the reporting period. Sorry, I'm not feeling well. It is just my commitment, so that's why I'm delivering the lecture. An event after the reporting period that provides further evidence of what conditions that existed at the end of the reporting period, and that indicates that going concern assumption in relation to the whole or part of the enterprise is not appropriate. So if any event will give you the evidence, further evidence for what? Number one, for the conditions those are existed at the end of the reporting period, and that will indicate about the going concern assumptions. For instance, uh, you know that we are preparing our financial statements on going concern basis. Say if you have made a contract between that particular time period, and due to that contract you have decided to disclose certain to close certain segments of your business, in that case going concern assumption is not appropriate. So that's why you will say that that is an adjusting event. Then, non-adjusting events. An event after the reporting period that is indicative of a conditions that arose after the end of reporting period. Now, these non-adjusting events are the events, those are not giving you any further evidence for the conditions those existed at the reporting period, but that gives to the indications that arose for after the reporting period. Okay, so you have made a contract to buy a certain quantity of your input from one supplier in future time period. Now that is one event, but it is non-adjusting event. Adjusting events. What to do with those events? You must have to adjust the amount which you have recognized in your financial statement at the end of the reporting period if you have adjusting events. Examples: discovery of fraud. You have found some fraud, and it means the figures which you have in your financial statements, they are not accurate. If your client is become bankrupt, it means your receivables would no more be available to you. That is also an example of adjusting event. Court case decision. So that decision gives you the evidence about the provision which you have provided about litigation. Sale of inventory, that is also an event which gives you the indication about to determine your NRV. So these are all adjusting events. Now, non-adjusting events, what to do with those events? Disclose for each material category of non-adjusting events after the reporting period. If they are material, then you should have to disclose them in your financial statements. Both what you have to disclose, nature of the event, and the its impacts on your financials. Examples: decline in fair value of your investment. Now it has prospective effect. Decline in fair value of your investment. And natural disaster, earthquake, it has also future impact. Announcement of major restructuring, again it's a future impact. Entering into major commitment guarantee, it's a future impact. New litigation started, it's a future impact. Issuance or purchase of shares, it's a future impact. So all those events, those not giving you any evidence for the conditions those have at the end of the accounting period are called non-adjusting events. And declaration of dividend after reporting period. Then going concern. Organization will never prepare its financial statements on going concern basis if management determines after the reporting period either that organization will be liquidated, will be closed, or its intent to cease trading, you are going to stop your trading, or have no alternative but to do one of the above. In that case, you will say that your financial statements would not be on going concern basis, but you will prepare your financial statements as discontinued operations. So what is the meaning of this? It means your liquidation of business, cessation of trading uh, uh, is going to be start, and your financial statements are will never operate for more than uh, 12 months. Okay, so you will disclose your financial statements as a discontinued operations, but you will not prepare your financial statements as a continued business. What are the examples? Management decides to close the business and sell all assets and settle all liabilities. Major earthquake which damage business premises and practically not possible to do business. One is your own decision, and the other is due to the market conditions, you would not be able to perform, to operate your businesses, and that's called you are not supposed to prepare your financial statements on going concern assumptions, but you will prepare your financial statements on the basis of discontinued operations. In your disclosures, you must have to update about the conditions those have at the end of the accounting period for which you have found new informations. And also you should have to disclose the information about financial statements who are supposed to authorize the issue of financial statements and who gave the authorization. And for non-adjusting events, you have to disclose about the nature of the event and its financial estimates, how much financial estimates it have, financial amount, financial figures you should have to disclose. After that, this is all about the discussion for IAS 10,